The Federal Reserve is about to resume interest rate cuts, but it's not going to make a big difference to the typical credit card borrower. That's because credit card rates are high and they're going to stay high, unfortunately. Right now, the average credit card charges a little over 20%. Let's say that falls a quarter of a point because of this anticipated Fed rate cut. Well, at 19 and 3 quarters, the minimum payment math is not all that different. TransUnion says the average credit card holder owes about $6,500. Well, if you make minimum payments at 20%, you're in debt for about 18 years and you end up paying about $9,400 in interest. If that goes down a quarter point, you end up being in debt for the same 18 years and you end up paying about $9,300 in interest. $100 over that many years, not much of a difference. The monthly minimum payment actually only changes by $1 per month if the rate goes down by a quarter point. That's why you really need to take matters into your own hands. I mean, honestly, even if rates fell a couple of points, which could take a year or more, even then we're looking at an average credit card rate probably around 18%, which is still very high cost debt. I would argue 17%, 18, 19, 20, I mean, they're all high. You need to bring your personal rate down to zero. Pay in full, obviously, if you can. Just over half of cardholders typically do that every month, and for them, life is great. They get rewards and buyer protections and convenience and all these good things. If you're in the other almost half that carries debt from month to month, no shame. I understand there are a lot of practical reasons people get into credit card debt, like medical bills and car repairs and groceries and other things. You need to break the cycle, though. Sign up for a 0% balance transfer card. That gives you up to 24 months interest-free. That could be a massive savings. You picture that average credit card balance, that $6,500 or so. Well, if you make 24 interest-free installments, you're looking at less than $300 a month to knock that out within 2 years. That is a tremendous savings. If you have a lower credit score or a lot of debt, maybe more than $5,000 or $6,000 in credit card debt, well, then the best approach for you might be nonprofit credit counseling. Work with a reputable group like Money Management International to knock your rate down to 6%, let's say, with one of their debt management plans. And you pay that down over 4 or 5 years and then you're debt free. You could also take on a side hustle. You could sell stuff you don't need. You could cut your expenses. You don't have to do these things forever, but do this for 6 months. Make some meaningful progress. Credit card rates are high. They're going to stay high. This is most households' highest cost debt by a wide margin. It's really one to prioritize.